Hello my fellow freedom builders and welcome back to the channel. The video today is about my performance on my automatic investing and trading, and it is a video that several of you have requested. You have asked me if I was never going to show you again how my ETF portfolios are doing and how my Forex algorithms are doing and so on, and of course I will. It's not that it's a secret, and it is not that it has actually gone extremely bad, but it has just been a lag of time due to all of these various situation and the videos concerning that instead. So there's absolutely no secrets in here, and a couple of you have suggested if it was because of a complete meltdown in my portfolios, but no. Actually, I can say that both my ETF portfolios and my Forex algorithm portfolios have been doing or quite a lot much better than the overall market. So let's have a look at that. First of all, I want to thank you all. Since the last video, we have turned a very impressive corner. We have 2,000 subscribers on the channel now, and that is absolutely a humbling experience. We started 4.5-5 months ago, and now we are 2,000 subscribers, and it is growing quite quickly. I think we are at 2,050 now. So if you haven't done already, please hit that subscribe button, hit the like notification, all of that down there below the video, so that the YouTube algorithm can see that you want to see more of this stuff. That would help me a lot, and thank you in advance. Let's get to the juicy stuff here, because as I mentioned before, I do like my investing and my trading to be as automatic as possible. It's not possible to make it 100% automatic because there are some adjustments that have to be made, but what I can see is that the more automatic I make my investments and my trading, the better my results. And that is because, like every one of you out there, I'm sitting here with a head on my shoulders with a brain inside, and that brain is based on some sort of software that was created 50,000 years ago when we were in our early stages of humanhood, and we actually only needed a couple of programs, one for fighting and one for running and a couple of others. So that is pretty much this Stone Age caveman brain that we are using when we are investing, and that means that we easily get lured into taking some quite unfortunate decisions when we are sitting and glancing at our screen all day long. And the more automatic we can make this process, the better. And that is what I'm going to show you the results of here today. First of all, my ETF portfolio, or should I say, I have 3 different ETF strategies that I run. And I have a bit different allocation to each of them, and I actually think I have changed a bit in that since last time I made a video about this a couple of months ago. And then I'm running 2 different Forex algorithms. I should say right away here, the ETF strategies are based on what is called momentum rotation or rotation momentum strategies, meaning that once per month, I rotate into new different ETFs, or not always, but once a month, I am looking at putting all the data into my Excel spreadsheet, and sometimes it tells me to keep the ETFs I already have, and sometimes it tells me to rotate in or out of new ETFs. So many of you are writing me and say, could you please tell us what ETFs you are using and so on? And yes, I can, but it doesn't make much sense because you don't have the algorithm behind this strategy. So it's not just that I'm buying 1 or 2 ETFs and then keeping them. It is actually quite a complex strategy, several of them. So it's a bit more complex than just buying some ETFs and then holding them. Then the 2 Forex algorithms, they are not my invention, and it's not even me that runs them. I have absolutely no clue how to do that. So a friend of mine that I've known for some years here in Denmark, he is a guy who developed them, and he's running them. He has all the servers set up and so on and so forth. So I'm just putting my money in to a broker account and coupling it up to these algorithms, and then he runs it all. I'm not affiliated with him in any way. If any of you want to get in contact with him, the last times I mentioned it, I think I got 10 requests for contacts to him. So if you want to contact him, just write me on the email. I'll write here below the video, and then I can send you his contact information. But it is not something I'm involved in as an affiliate, and you should know that it is risky and there are some big drawdowns. So I'll not be responsible for you if you lose any money on that or on any other things you do following my videos here. So that's it. Let's go straight through it. The 3 ETF strategies. I have here a little spreadsheet where I track my performance, and I just show you in percentages, because I know several of you have asked me how much money I have in each ETF and so on, and I do like not to share my the overall portfolio, mind the size of that. But sometimes in a video I tell you a bit about it, but it's not like I can give you the exact amount on how much I have in each ETF. But let's look at the performance, because that is actually the most interesting, if you ask me. Here we have the ETF portfolio 1, a strategy I called Regime 2-1, and here you can see I have been tracking. I've actually been tracking this way back, but I just pulled out the last 4 years here, and then of course 2020, and you can see the performance here in 2016 compared to S&P 500, and you can see that in this strategy is actually beating the S&P 500 for 3 years, and then last year 2019 was a bit frustrating year, because the strategy made 5.2% and the S&P 500 made 31%. And the reason for that, if you haven't noticed, is that the market was actually going down in 2018. And then Fed came in and just around New Year, and the market shot up straight in a big V, this V turnaround where it drops and then it goes straight up and it looks like a V. And then it went sideways for half a year, and then it went straight up again. And that is not something this strategy really likes. But actually, it made 5.2%, and that is great. But the market made 31.2%. And that annoyed me a bit, because, of course, I like to beat the market when possible. Here in 2020, you can see that right now it is looking quite well. It has made 4.6% altogether here in 2020. And the S&P 500 as of yesterday was down 13.2%. So if we take a look at it here, this is the yearly the performance here. What I should say here is also that this performance is done with way less volatility, meaning that if you are looking at a Sharpe ratio on this, it is actually quite high, because the drawdowns are not very big. So this is from year to year, and down here we have from month to month here in 2020, and you can see the blue here is my, let me just see, yeah, the blue here is mine, and January I beat the market, but February I didn't, then I did again in March, and haven't done here in April. So of course it varies, but in March here you can see the market went down 12.8% almost, and I was up 2.47. So that is some of the things I like in an ETF strategy, is that it is making sure that I'm not losing my shirt when the market tanks. This strategy actually in 2008 made, I think it was 12 or 13%. So that is something I like to see. Then I have another one that is maybe the performance looks a bit the same, but they are built on completely different strategies or thought processes, meaning that that of course the performance can correlate, but they shouldn't correlate too much, because that they are not built on the same structures and principles. But you can see here, in 16 it made 12%, 15%. Then in 18 it made minus 1% approximately. Last year was also a tough year on this one, and then this year we are up 15.8%, which is quite a lot more than this one. So you can see that altogether. I don't have a graph on this. I'm not sure why that has fallen out. But as you can see, again, the last couple of years, we beat the market, or just about the same here in 16, then underperformed in 17, a bit better in 18, underperformed in 19, and then really have beaten the market here in 2020. So we made just about 0 here, and then 6 and 2% this year. So this 15.8% is the compounded interest of the entire capital here. Very good. The last ETF strategy is a what I call the same here, the double, that is built on the exact same processes here, but way more aggressive. And when we look at this one, you can see that it has some very good performance, but please be aware that that is with a lot more drawdown. So there's a lot more volatility risk in here. Not really the risk of going bankrupt, because it is a very solid strategy, but we are taking some beatings once in a while. I think the worst month here was a 31% drawdown, something like that. So you can see here in 16, 13.5%, 43.5% in 17, minus 11.2, so it underperformed here in 18. It was absolutely horrible here in 19, where it had a minus 0.7%. And then this year we are up 38.1%, and we actually had a little drawdown now. I think this was up at 46% or so one of the other days. So as you can see in January here, minus 0.88. Then we had February almost plus 18% in a month where the S&P 500 were down 8%. Then we had a March where we made about 12% up, where the market was almost 13% down. And then we are a bit behind the market here in April. So you can see the overall graph here, and you can see month by month here in 2020. Beating the market quite severely here. So what I'm trying to do is I'm trying to make my ETF strategies stable. I know you could say this is not particularly stable, but I'm not. It's not like I'm putting a third of my money in this aggressive ETF portfolio. I think I have something like 15% in that, and I am rebalancing once every 6 months, so that if this one goes up 100% one year, then I don't have 30% of my money all of a sudden in the aggressive portfolio. So I'm trying to keep the allocation to this a bit down, but it is a good strategy to spice up the performance a bit. So that was the 3 ETF portfolios I'm following. If we go back to the algorithms, and that is the currency algorithms, then I am invested in 2 right now. And I should say that I chose one of them. I choose not to follow one of them. He has 3 different algorithms, or he had at least in the beginning of the year, and I chose not to participate in one of them. But that was because it was a bit too risky. And that exact one has taken some drawdowns this year, but is slowly moving up. So I won't say that I would never invest in that one. But I've chosen the 2 most conservative algorithm of his here. And one of them, you can see here, for 2020, made 1.8, then 5.4, 2.8, and 2.5% here. So I put half of my algorithm money in this one, and the other one has made 2.8, 0.5%, 2.8, and 2.5. So actually, when you look at these 2, combine them, I am making just about 2.5% per month on these algorithms. But just remember, because that is, of course, amazing, and if we could do that forever, we would all be more wealthy than Warren Buffett in a couple of years. Just remember that these currency algorithms are also taking some drawdowns. And when some of my friends ask me about these algorithms, and I'm saying, well, you're welcome to contact this guy, but just please remember that there are drawdowns. And people are saying, yeah, I know, there's always a risk. But then all of a sudden, when it has a floating loss, meaning that it has some losses but hasn't closed the trades yet, all of a sudden when there's a floating loss at 10 or 15 or 18%, people are calling me and saying, have you seen how much it's down? I just say, well, I don't want to be involved in your putting money into Forex algorithms. It is a bit more of a risky game. But again, I've chosen two algorithms that are based on two very different sets of principles, so that they should level each other out a bit. You can see one of them made 0.5% here in February, but the other one made about 5.5%. So that is because they are on different time frames, on different principles and so on. And that's the way I like to do it. I like to diversify into different products, into different strategies, into different time frames to get my growth in my equity line as smooth as possible. Then of course you could say, why don't you just choose this extremely aggressive one, because that ends up with the largest performance. And yes, but then again, I might be needing my money just at a point where my algorithm is in a big drawdown. So I do like to have a diversified portfolio, and that means that I'm not making 1,000% per year. It is much more conservative, and you could do it a lot more leverage. But I do like the conservative approach. I do like a good night's sleep, and I don't want to lie awake in the middle of the night thinking about how my portfolios are doing. So that's the reason why I'm choosing the way I do. But of course, I know it's different for all of you. So I hope this gives you a little picture of my automatic performance. Some of you have already also asked about the dorks of Dow and all of the other strategies I mentioned, the dividend aristocrats and so on. But basically right now I also have money in stocks, but that is more of a actively managed portfolio, and that is in some of the money are in the Scandinavian market and some of them are in the US market. And we have been doing quite well. I can show you another day the performance there. Of course, I have taken a hit as well, but I think for the year I am down a few percent, and I have started to invest slowly again, and some of the stocks are up quite a lot by now. So I can show you the performance on the stock portfolios in another video. But I hope this gave you a picture of how my automatic performance is doing on the algorithms, on the ETFs. And feel free to ask me anything on Facebook Building Freedom or underneath the video here. And if you haven't done already, remember to hit the subscribe button, like the video, comment below, and so on and so forth. I'm looking forward to talking to you again soon. Take care of yourself and your money out there. Bye for now.